Perfect. So, all right. So let me just go briefly what we were talking about last session. And okay, how can I go to let me see, stop sharing first, and then going to um, just want to show you the whiteboard. Try to find it out. Used it before. Okay, whiteboard. All right. See it, folks? See my whiteboard? Okay, I'm sure you see my whiteboard, but don't put like any arrows or don't annotate anything. All right, so just imagine market or price is going up and then coming down, then a spike up, and then coming down, clean out this pivot. Everyone is getting bearish, but it goes up, and right there, something like that comes down. So you see my pattern here. So this is called QM pattern. Lots of folks actually know this as a head and shoulder, which is not head and shoulder. It's very similar. We talked about this QM pattern before, because the difference between QM pattern and head and shoulder is this. So in QM, this pivot is coming down and the stretch below this pivot, which is very important for us. And this happens a lot in the chart. So when we have a bounce to this area, we were talking about how to trigger the trade. That's going to be great selling opportunity. Okay, so this is going to be short position here for targets down there. In a bullish case, this is a bearish one. All right, this is bearish one. For the bullish case, that's going to be like this. So we have this coming down, going up, coming down again, going up sharply. All right, so you see, cleans this pivot. Everyone is getting happy. I know lots of you like to see this pattern, not this one, because you're already hammered with his positions, I should say. Anyway, so it's coming down here, close to this area. So that's going to be long position, long trade. Okay, so we can go all the way up to here. So this is a bullish case. This is bearish case, right? So we have two different setups for one pattern, and one is bearish, one is bullish. So we were talking about this. So this is a QM pattern, and in this session, today's session, we're going to talk about details of it, some details, how we can read the chart properly. All right, so let me just I believe, yeah, let me just this one and share my screen again. Screen 2. All right, so you should see my chart now. See my chart? All right. All right. So now we know what we are talking about. So let's go to S&P chart, see QM pattern before the one that I used. Right there. So look at that. This is the body, you see? So We have this double head coming down, clean out this area, coming sharply, going up. We took the short position. The short position is coming down, right? But this is CPI last week. Market didn't move down properly, so it's just a failed pattern, right? So, but this one triggers properly, you see. So we have this as a head. This is a shoulder, and this is the trigger point. So if you just continue this one, see how nicely it triggers coming down. So it's very good. 4 hours short, that's going to be a good opportunity. The other one was something like this. So you see, sharply coming down. So you may ask, this is a left shoulder, this is head, and how about the right shoulder? So the right shoulder came up like this, triggers the setup, and then sharply coming down. It doesn't stretch through all the way up to here. So if you go to hourly chart, let me just make it more specific. Right. So you see, not this one, actually, this one, right? Right. So we came down here. So if you see, this is the pivot, smaller time frame. So we just pierce it down, going up. It doesn't have enough power actually to go all the way up to here, because if it went there, that would be perfect setup, but already triggered, right? So already triggered and then went down. But this pivotal cleaning, something like this, is very, very important for us, because we want to see this one cleans. And this one just pierced through. Everyone is saying, oh, that was a stop hunting. All those support and resistance traders, because they put a stop loss here. Oh, that was a stop hunting. No, that was not a stop hunting. That was the purpose of the market, to just take out this position, take you out of the trade, and then going up, make everyone bullish. Look at that. So it was like, if you put your stop loss as a short position, you would be toasted by this. But based on the QM pattern, traders, we were looking for something like this. Even we were looking for something like this up there. So again, watch that video. We talked about the liquidity pool here, and we talked about the wide range bar, why this one goes here, not above, just because of this formation here. Look at that. So this formation right there. So this is the area that we were looking for. So market didn't have enough power to go up because of this, right? So even you can just add more short position here. If market is stretched above, so add more, like deploy your money on the short position, a stop loss would be on the top. So we were talking about that in previous video, and nicely gained, right? The same. Look at that. So this is left shoulder, head, right shoulder. Look at that. So this is pretty. So if you put your stop loss here, this is your triggering point. Even if stretch it up, comes down. Why we trigger this? Just because this, exactly the same thing. Look at that. Just the pinch, piercing through, clean this pivotal area. Everyone say, oh my God, this is a stop hunting. No, this is not a stop. Well, you can say this is a stop hunting. That's the whole purpose of this pattern. We're coming down, going up. Again, this is a good trigger for short position. Stop loss would be on the top of the head. Boom. All right. So how many times we just look at it in S&P 500 hourly chart? And this is futures market, by the way. You can use it in SPY. You can use it in any commodity asset. You can use it in any stock asset classes, anything. Okay, can this pattern to be utilized in daily trade? Yeah, absolutely. I'm using hourly, right? I use hourly, I use weekly, I use daily. So this is hourly just because we can see more setups. You can use it in weekly. You can use it. Mike asked this question. Sorry, I didn't call it. Mike asked, can this pattern to be utilized in the daily charts to make decisions on option trades? Yes, it is very, very good strategy for options, just because you don't have stop loss in option trades, right? So when you see prices going there and you're not sure if prices, because for traders, you need to be very, very specific, right? For options, you don't care even price is going up over there or around area, right? So if you see prices consolidating here, you can just take a put position, right? But a small amount, just be careful, a small amount. Don't blow up your account with a huge, because Ali said, or because this pattern is very, very bearish. So I'm gonna just bet all the entire money. Small amount, but gain would be remarkable because of this candle. Just implied volatility will skyrocket after this. So if you have got a put position, and you will gain a lot, right? So exactly, I've done the same for McDonald's. So McDonald, if you look at the McDonald chart right now, everyone is looking at the McDonald chart. I'm not gonna bring it up just because it's in the other account that I have. So I have to just change my. But if you look at the McDonald, so that's why I got into short position for McDonald. However, it is very, very strong momentum to the upside, but that's the pattern I'm using. So Zora said, how do you set up the TP? Will you talk about, oh, TP, we talked about the previous video, Zora. You haven't seen that video? So we talked about the TP. So when you get a short position here, the best TP would be here, the testing area, because we are not using this. Well, again, I don't want to talk about that detail because the entire purpose of this session is going to be detail of the QM pattern, not the QM pattern. But if you look at the QM pattern, question has been answered already, all right? Okay, so that is the introduction of the QM pattern, just because some of you folks, you didn't see that, and we just want to talk about briefly. So right now, market is here, right? We have some setups, something like this. Let me just show you. Just this is, let me bring my note here. All right, so this is in a bullish case, right? Bullish case. So market is going up, just a retracement, backing up there. Up there, okay, so, and this one could be a bit larger than this one, okay? And then we will have a correction, and this correction could be spiked down. That's gonna be spiked down all the way, piercing this, engulfing this pivotal point to, we call as a DP, or demand property or demand area. So this is FL, so flag limit. I'm gonna talk about these terminologies, don't worry about that. Coming down here, and then going all the way up above this pivotal point, and then coming down to this area. So let me just massage it a bit. Something like this. All right. So I've talked about demand area or demand property, DA, let's say. I've talked about FL. You've heard FL. So what is FL basically? FL is stand for flag limit. So what is flag limit? Let me go down there. Flag limit is a base. Is a base. Okay. like this. So this is flag limit. If I change the time frame to 4 hours, you wouldn't see that demand area. So let me just again changing back to the hourly. So hourly, look at that. So this one is going up, coming back down, and then going up. So this area would be FL, or flag limit. So this is very, very nice buying opportunity, by the way. But if you go to 4 hours time frame, you wouldn't see something like that, right? So you just wonder, what happened to the market? Market came down to this top of this wide range bar and then going up, because that was a flag limit, right? So if you just scale it down to the lower time frame, you will see that. So this is a flag limit. Okay. So what is FTR? FTR means failure to return. FTR. So this is FL. We are talking about this just because I'm gonna just refer to these terminologies, and probably and you need to know that basically. And this is FTR. FTR. So what is FTR means? Failure to return. What does that mean? This is a resistance area, right? So this is a resistance area just because market went all the way up to here, coming down, bearish consolidation, fails, and market in CPI number going all the way up there. So there should be a strong buyer here to spike up and engulf this pivotal point, right? So lots of people, just imagine, lots of people, they take short position. They put the stop loss here, and boom, stopped out. So what type of candle or what type of orders stop them out? FTR. We call that area as FTR, failure to return. Because for those ones who are in short position, they kind of like expecting market is returning back down from this area, because this is wide range bar, nice doji pattern to the upside, dragonfly doji, it doesn't work out, going down. So they said, okay, there are lots of sellers here. I'm expecting price, when price is getting up there, I'm going to take short position to coming down, but this fails. So that's why we call it as a failure to return, right? So FTR, FL. FL is kind of supporting the prevailing trend. What do I mean by supporting? So we had spike up, consolidation base, going all the way up, following the prevailing trend, which is momentum is up. So this is upward trend. So this is FL. FL is a flag limit supporting. So any pullback to FL area would be buying opportunity, right? This is fresh. This is clean. You're not going to trade it several times just because it acts one. You're going to just take a position another time. No, don't do that. Just once. Okay. So first pullback, buying opportunity. Went up, clean, risk-free. Make it risk-free or take a position off as a trader, right? So this is FL. Failure to return means it fails. Basically, it fails. You expect prices coming back down, but it didn't, so it fails. Failure to return, FL, there is a big difference. What's that big difference? So here is classical traders, they call it as resistance, right? So this is a strong resistance. And in the first shot, fails. So we call that the FTR. So if you just scale it down to the lower time frame, because we want to see what's happening here, right? We want to see what's happening here. So if you go down to, let's say 10-minute chart, just all right. So you see, when we are getting there, again, when we are getting there, market just react, went up, coming down, then up, right? So basically this is the FTR point. Again, we want to narrow down to see what's happening here, just because this is the beginning of the FTR, right? This is the first trench, hit the first trench and then pull back and then reversing back up again. So that is kind of very, very interesting. So we're gonna just narrow it down to 1 minute chart. Again, zoom back. Hopefully it gives me, no, it didn't, just because my chart actually doesn't update 2 minutes. Let's see, 2 minutes, no, it doesn't give me. Let's say 5 minutes. Hopefully it gives me, no, it doesn't. Sorry, folks. 10 minutes is the, yeah. So we can't get less than one, just yeah. So, but this is FTR, right? So another buying opportunity would be this candle. You see this confirmation follow through? So look at that. So if you want to just put another buying opportunity right there, right there. So this is FTR, right? I'm gonna just change the color to yellow dash line, and here is yellow again. Make it tick, and right there, right? So if we zoom back, when price is coming down to this area, at least there are two approaches. If you are bearish overall, so you can't take short position. I'm not saying now or tomorrow or I mean on Monday or something. Generally, as a trader, we are just talking about. If you're bearish and you think that market is going down next week, so you took short position, this is going to be a nice target place or take profit place. Okay, so probably when market went will go down to here to this area, probably we will see a bounce, a sharp bounce, at least for I don't know 50 units, 25 units. We expect a bounce just because of this. There are lots of why, because there are lots of sellers there change their position to buy just because they stopped out. Stopped out means all the stop losses change to the buying orders, basically. So there are lots of buy orders still there, right? So we expect a bounce from here. So that's going to be good targeting points, even if you don't want to buy. If you want to buy as a scalper, just for, I don't know, 10 points or 10 units or 20 units or something like that, so that's going to be your stop level below this. When it reaches to this area, you can just take a bounce, probably to bottom of this pivotal point, which we can just narrow it down better. So here is the wide range bar, back test going up, right? Right there. Zoom back. Perfect. You see how it reacts? Nice. Okay. So there is going to be target 1, target 2, and probably target 3 is going to be somewhere around here, just because this is a very important area as well. So this is a pivot, this is a pivot, this one breaking all the way up, so engulf these pivotal points. So I would say if you want to be greedy, for the third target would be around here if you are in short position. Okay, if you want to wait for buying trades, so that's going to be the first area, but it's going to be risky just because it has been tested once. So you don't want to take too much position here, but this one is fresh, never tested before after CPI. So this is fresh area. So probably you will see a stronger bounce. If market goes down to here, to this area, probably we'll have a bounce to this bottom. I don't know if it's going to go up after that or it's going to just follow the prevailing trend, which is down. However, look at that. So this area is very, very interesting. Again, is this a QM pattern? This is kind of like a today's session that we want to talk about. Very, very important. Again, going back up to our draft here. Okay. So you will see, we talked about this. We talked about this FL. This is a demand area. So after this, we have a spike to the upside, and then sharply market is coming down. You don't know what happened because you expect prices reacting to this area, but it doesn't. That's the first option or first probability, right? So here's the first probability. Market is coming down. It doesn't react to this FL area, coming down to the demand area, bouncing back up sharply. It's very, very sharp. It's not exhaustive or sloppy and choppy movement. It is very, very sharp. Okay. So market is coming down sharply, going up sharply. And you see what the heck, what's happening? Those bastards, they're gonna just stop hunt everyone. Yeah, that's they do. Okay, that's what they do. But this is, oh, sorry. This is what we call a secret signal or hidden signal. So when you see market is coming up and then coming down sharply and then going up, engulfing this previous pivot, mark this point. Market eventually, market is gonna come back, test, or pass through this area. So we call it as a hidden signal, this area, or secret signal, right? So when it comes down, this FL is going to be buying opportunity for us. I know you're confused. You say, Ali, this one is coming down and probably pass through. Why we buy this? Just because this is a nice bounce or probably going up, then coming down, right? But we want to take this bounce. Let's just do it something like this. We want to trade this yellow line. And I don't know if this yellow line is going up there, clean this pivotal area, or coming down lower to this pivotal area. But again, my first priority is market is going to engulf this area. Market eventually find out a returning place up here, here, or somewhere here, I don't know. Let's say here, to coming down to engulf this area. So when you see this, you're gonna forecast, okay, here is my secret signal, market is going to test this area again. What's the probability? 90%. Very, very strong probability. So we are going to talk about it. Okay, so this is a bullish case. In a bearish case, exactly upside down. So let's have this coming down, something like this. It's forming something like this. Okay, very, very choppy, sloppy, exhaustive move. But suddenly, market is going all the way up. We call it as a short squeeze. We see that one, right? And then coming down. So right now, all the sellers are in pressure, stopped out. They are getting to the buying opportunity. And right now, all the buyers are under pressure just because market is coming down, stop hunt everyone. And then for the pullback to here, we are going to take what? Short position. Am I talking difficult, guys? Do you have any question? Am I talking difficult? I try to make it simple. Okay, okay, right? So again, this is a bearish case, this is bullish case. So just give me a second. And we're going to, where is our secret signal here? The secret signal is first initial move surprises everyone. So here is the first initial move, surprise. Oh my God, what the hell is happening? So market was in uptrend. How come it goes down all the way to here? So this is our secret signal. And here is secret signal is market is coming down. How come it goes up suddenly like this? So this is our secret signal. So let me just make it red. This one. All right. So here is our secret signal. Here is our secret signal. So when we point out something like this, we know that market eventually is going back to this area. Market is going back to this area, but I don't know when, because it's going to find a reversal point. But the good probability, the short-term probability is this line, short position. Probability for this is going to be long position, but eventually market is going back there. Market is going back there eventually, right? Let me take a screenshot because I want to post. Sorry, folks. This is nice one. I'm gonna just take a screenshot of this. All right. Okay. Okay. So that was introduction for today's session. Okay. So we are going to see in the chart. Right now, this is theory. This is just the schematic, but we're gonna just let me just clean this stuff. We have the screenshot. Hopefully you took the picture as well. So let's see. In the chart, let me just clean this stuff. Sorry, it's kind of like a weak software. It's not like engineering software or Windows software. You can delete all. You need to just touch or click one by one. All right. So what was the first assumption? The first assumption is when we have something like this, when we have sharp move to the downside, in the next upside move, market needs to what? Clean out the previous pivot and then coming down, right? So we can see a secret signal. Okay. So this is, what is this? So market is going up. So this is a bullish consolidation, fails to the downside, then going up, right? Then going up. When it comes down, that's going to be our buying opportunity, right? So where is the buying opportunity? Because market have a wave up, wave down, wave up, wave down, engulf this, wave up, wave down, crazy coming down. And then this is buying opportunity, but we don't see any FL here. So this is very, very old, probably. If I want to scale it down, it doesn't show. Let me just go to the bullish case. Okay, Okay, nice. Okay, so look at that. So here is another one. This is a spike down, all of it down here, going all of it up here to make a new high, right? So if you want to see our pattern was something like this. Then coming down sharply, to this area, and then going back up, right? Then going back up, make higher high, then coming back down to this area, to FL. We're going to take what? Long position, right? So this is our bullish case, right? So market is going up and down, up and down, up and down, sharply coming down, but went all the way up to make new high. Went all the way up. Any pullback, buying opportunity. Okay. So this is very, very bigger scale, but this one is very, very nice one. So market is going up and down, up and down. Here is coming down sharply, but went all the way up to here, coming down, buying opportunity. So how are we gonna identify, how are we gonna identify this area? So first of all, we need to mark our secret signal. And the first move, the first surprise would be secret signal. Here is our secret signal, first of all, okay? So when you see a sharp move coming down against your trend, sharp move coming down, make higher high immediately. Just 2 candles after that, even 1 candle after that, it went to the higher high, right? So that is your first secret signal. So I said, okay, this is a secret signal. Thank you very much. So I'm gonna just make it clear. All right. So this is my secret signal. If you want to make a trade, so you are waiting for a pullback from this high to FL or a proper way. So this one is coming down all the way down to here. Where is your stop loss for this trade, for the C, point C? Stop loss is below secret signal, which is A. So that would be your stop loss. Okay, so your secret signal would be your stop loss as well. So secret signal or hidden signal. So market eventually is coming back down to hit this area, folks. I don't know when. I know it went all the way down there, all the way up there, but it's coming down here as well. Something like this. Is it a secret signal? So we can talk about this. Is it secret signal or not? So this area is FL. So we can just go into 15 minutes to see if we can just go down. Right. Okay. I'm telling you, this is very, very tricky one, just because the spike low is very, very deep. Usually, this would be a nice secret signal here, this one. So you can buy here, but this ugly candle went all the way down, scares you. But if you put your stop loss here, you wouldn't stop out. Market eventually help you. But based on our pattern, this is the secret signal. This is the secret signal. This is FL. This is buying opportunity. Why? Because this one is coming down sharply and then going up to make higher high. and then coming down all the way to here. That's very interesting. But again, our stop level was accurate, right? So even if you get to position early, you wouldn't stop that and you make profit, and profit would be inside this white range bar. And you see this is gap down. Again, secret signal. Nice, right? So market is going up. Consolidation. Look at this. Market is going up and then sharply coming down. Sharply gap down, right? Sharply gap down. You see what the heck, what's happening? And then make a higher high. When it went higher high, pulls back to the white range bar. So this is your FL. This is very clean, right? Where is your stop level? Stop level is here, right? For this trade. Stop level is here. First TP is here. That's the first TP. So market just twice came down, test, went all the way up there. So we were talking about this one. This is all bullish case. So we were talking about this one. Market make bullish consolidation, came down sharply, engulfed the previous pivot. Is it secret signal or not? So I'm just asking you folks. Is it the same pattern like this? So market is coming down. Market is coming down. Yes or no? What do you think, guys? Zoro said yes, yes. Okay. Guys, when it comes down, needs to immediately going back up and clean the previous high and make higher high. In this case, we don't have a higher high. We have lower high, which is not a secret signal. And as you see here, the pullback didn't act properly like this. So this body needs to go here. And then in a pullback to this area would be buying opportunity, right? It doesn't show any higher high. It shows lower high actually. So it is not secret signal. So that's why it doesn't act, doesn't do well. So make sure that when it comes down, it goes all the way up above the previous pivot. All right. Here is another one. So market going up, consolidation, sharply coming down, previous this, below this previous pivot, and then going up, coming down, going up, clean out the previous pivot. So any pullback, which is this one, is buying opportunity. Again, when you find out a spike low, that would be your secret signal here. So this is your stop level, and you're waiting for the pullback. Okay, the pullback to FL. So this is your reversal candle then going up. So this candle is your FL. So any pullback to this area would be buying opportunity. So is it good buying opportunity? Is it fresh or not? I would say no, it is not good buying opportunity. Why? Because we need this one to be engulfed first. Oh, sorry. So my bad. This is good buying opportunity. I just look at this one. So yeah, it came down, going up to make higher high, then engulfed, coming down to FL. Perfect buying opportunity. Sorry, I just look ahead. All right. So nicely going up. This is the first target. So you can take a profit nicely. No headache, right? So this is your stop level. And then again, this one is coming down sharply. So that's going to be your secret signal again, right? This one is coming down, going all the way up there. Right? Let me see. Okay. So this is going all the way up, down there, going all the way up there. But how about the pullback? Do we have any proper pullback? Yes, we did. It was very, very weak, this candle. So stopped out, unfortunately. So that's the stop loss. All the trades, actually, you're not going to win all the trades. But how many stopped out we have? Just one, based on those trades, right? So again, just looking at it, see if I found a bearish case. Okay, so the last one is here. Actually, this is a bearish case, I think. Market is forming. I think so, but it worth to try it. Here is coming down to this area. Would be up, coming down. I would say this is going to be your buying area. Or if you want to take a profit, take a profit. Right? Because we already engulfed this and we didn't make higher high. So this is based on QM pattern, by the way. Here is series of higher high, lower high, engulfed by this candle, pull back to the first pivotal point, right? So look at this. So this is the previous low, initiate this higher high, but engulf with wide range bar. So any pullback to this area would be selling opportunity and right on. So we just act. So probably we are coming down to this area. If you want to take a short position, there are two levels of a stop loss. One is here, which is very, very big one. So you need to manage your position, probably make a or take a lower position, a lower size. Or if you want to be aggressive, you can just put your stop loss here. And also stochastic reversal is coming down. So this is a good confirmation, by the way. We have followed through candle. We are consolidating. This is bearish consolidation. So everything looks good. But if you want to just take a trade, make sure that you just put your stop loss. If you want to put your stop loss here, that's going to be aggressive one. So higher size could be okay. But if you want to just make a wider stop loss, something like this, so you're going to lose money with the same size. So you need to manage your position size, probably lower size, right? Target level is first one is here, the second one is here, I believe, and the third one would be here. I think that's going to be ultimate level. We'll see how it's going to act. Probably Monday, we'll see. If market is coming down, so probably we are right. Okay. Yeah. All right. So let me just stop sharing, going to McDonald's, because I know that lots of you are stock trader or stock investor. Let me go to McDonald chart because that's going to be in the other broker. Any questions so far? folks. You can unmute yourself as well because a number of people here, 5 now, so you can unmute. All right. Okay, so let me just share my screen from McDonald. Okay, so see my screen? Okay. All right, so this is McDonald chart, and as you know, lots of yeah, so momentum is pretty high, and this bullish momentum is ended up to this QM pattern again. So we had like a bullish consolidation, make higher high, but sharply coming down, like a gapped up and then sharply coming down. So we are retracing back up to here. So it's pretty weak retracement, right? So if you call as like a left shoulder head, and this is going to be right shoulder, but this is not head and shoulder pattern. This is a QM pattern. And the reason is we are just coming down below this previous pivot, initiate this high. So whenever you see something like this, it's going to be good opportunity for short position. So I believe Mike asked about option. So I took option, like a put option on this, just because I'm not sure if McDonald is coming back down from this level or another higher high to this level and then coming down. But these areas are very, very high probability for a short trade. Again, let me just show you. Like you see. So this wide range bar is crazy in hourly, right? So in hourly, this is a very, very crazy wide range bar. And right now tries to form out a bullish consolidation, but I believe this area would be very, very high probability of the reversal. So when this reversal happens, we're going to see another short spike to the downside. However, there is no certainty in the market. I'm going to show you some charts that this pattern fails, and after that market just spike up to the upside. So if it fails, how it's going to fail? When we have close above the head. So when we have close above the head, quit, exit the trade. You're not going to win, and you're going to lose badly if you want to stay in that trade. Okay, so you need to take a loss. So that's why we have stop loss. But for option, your stop, we don't have a stop loss. So your risk is limited. For example, if you buy a contract, a put option, one contract is going to be $200 or 250, I don't know. So that's going to be your maximum loss, right? Naked, I'm talking about naked option. So that's going to be your maximum loss. But if it goes down, so what's the next level? The next level is here. So if it goes down, clean out this pivotal point, it's going to go all the way down to here to this gap, which is pretty substantial win for the put option if you have it, right? So again, it's just the managing risk to reward and see how it goes. But yeah, so again, so this is McDonald based on the QM pattern, and this is H4. Let's see. You see, cleans the previous low here. And this one is coming to this nice demand area. So if you want to just cut this one as a demand area, so this is a perfect spot for demand area. That was nice bounce we expected, and also this bounce is coming to this QM pattern. Well, look at that. So this is another QM pattern, right? So this is low to the high, and then coming down sharply, clean out this pivotal point, going to this wide range bar, bouncing back up to this selling area, and look what happened after that. So I'm just seeing something like this again. So this is low, high, coming down, bounce back up, as we expect that bounce back up. You're expecting here, bounce back up here. If it goes above this head, this pattern fails. So it's going to go all the way up to make another new all-time high, probably 290 or so. But if it reverses from here, so look at the move after that. So probably, I would say there is high probability to coming back down next week. If market in overall is getting to the bearish momentum, which we just saw in NASDAQ chart, probably S&P the same. So there is a probability for McDonald to come down on Monday, Tuesday. And if you have option, that would be great. Again, your loss would be limited just because naked call. Don't sell anything. Don't sell call or something like that. You're gonna blow up your account. Just yeah. Okay, so any question, guys? No question? Everything's clear? Okay, sounds great. So we can call a meeting. Hope you enjoy it. And that's it. Have a good weekend, folks. Can we come back to the S&P? Yeah, for sure. Yeah, what do you want? H4. This is another chart, by the way. This is my main. So, Phoenix, what's the question? Thank you. So, you don't have any question? Okay. All right, folks. Let me just. Oh, sorry, you don't share it. You don't see it. Sorry. You see it now? So this is 4 hours short. I stopped head and shoulder, but I'm not sure. So you're gonna make a case here. No, this is not QM basically. I don't see any QM or so. So in H4, I don't see a QM to be honest. Let me go down probably to H1. So you want to call this as a QM? Okay, so look at that. So here is a spike down, spike up, then pull back, right? So if this one is, this is just the one that we talked about. So we have a spike down, so this is a secret signal, right? This is a secret signal. And then going all the way up there to make a new high, which is great. Any pullback would be buying opportunity, which happens, right? So this pullback to this FL would be buying opportunity, which triggers. But if you want to just talk about the QM, I don't see QM here. It's not that clear like NASDAQ, right? Yeah. And this is FL as well. So look at that. So this is nice FL. So nice reversing back up. Expect Price is coming back up here, and it did, right? So overall can be bullish on Monday. Monday, not sure. Actually, it's kind of like a mixed signal. If it close above this on Monday in hourly chart, you're getting back to 39.90. That would be bullish. But you stay here or even take out this pivotal point, so we're going to be bearish coming all the way down here. I'm just looking for, to be honest, if you see my weekly analysis video, I just talked about it. So probably this is going to be the major trend line for the short-term bullish case. So even if we go all the way down to here, we shouldn't be bearish at all. That's going to be buying opportunity. I know it's going to be weak, but that's going to be buying opportunity. If we take out this trend line, take out this pivotal point, that we're going back to new low. But so far, market is bullish. However, this is going to be at the top of the bull trend, short-term bull trend. So wait for the pullback if you want to buy. So you're not going to buy here. You're going to buy here, right? So overall, if you are bearish with a major trend line, which is coming down, we are close to 200 moving average. Which one? 200 moving average. So I'm not, to be honest, I'm not paying attention to the moving averages too much. It's going to be just a trigger signal for me if we hold up. So moving average is like very, very basic and simple stuff. So don't rely on them as like a first priority. Moving averages are just moving averages. Take it as it. So the basic point is price action. If you just see the price action is bullish, you can come up with moving averages as a confirmation, but I don't rely on moving averages because you don't know which time frame moving average is going to act as a support and resistance. You will see sometimes actually it's just like a falling knife going all the way down from the daily, but it's going to hold up on weekly. But before that happens, you don't know. You're going to check afterwards. So moving averages are kind of like a lagging indicator. It's not leading indicator. The one that we talked about, just the QM pattern, we kind of like waiting for a pullback to the certain levels to buy. So we are ahead of market, right? But moving averages doesn't show you we are going to back there to buy. When we get there, when we see the reaction, when we see the reversal and say, probably this moving averages is intact, right? But the one that I explained today and QM pattern, we were waiting for some certain levels to trigger our trade, short or long, regardless. But we are waiting, we are ahead of market, right? So that's the difference. Okay, any questions? Any more questions? I call it 1, 2, 3. All right. The levels you showed, I've noticed there are lots of volumes. Yeah. Volume is important as well. That's right. All right, thank you, everyone. Thanks for your participation. See you in the chat room. Bye-bye.